One day off for the market. We got a lot of price action to cover, folks. I mean, jobs number, earnings, LA fires, and analysts, man, they are working hard this week. We'll cover all that. As I said, jobs number at 8:30 a.m. Jeremy Schwartz, CIO WisdomTree. He'll be joining us at 8:35. We got a weekend strategy to talk about at the end of the show. We are fired up on this Friday, folks. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We're down 10 handles. We traded last night and yesterday, up and down all over the place, but unchanged again is going to be a big number. I think 59 and a quarter. That's your pre-market high. And that was your close from Friday. So talking about the buck is flat here, just under 109. TLT desperately needs a bid. Made a new low for the move yesterday. Lowered today, down 13 cents, 85.90. Uh-oh, crude, that's not good. Inflationary, USO up 319 at 80.49. GLD strong, that's up a buck, 246.86. Silver up not nearly as much, 18 cents at 27.58. Bitcoin futures, they're bouncing back. Finding support in that same area again. The futures are up nearly $1,300 at 95,515. Let me remove my screen share. Bring on a ailing Triple D, and he'll join us here briefly. And Christian Fromhertz, here, our fundamental and technical guru. Gentlemen, how did you enjoy your day off?
I coughed the whole day, but other than that, pretty good. Still fighting the sinuses or whatever the heck's going on in my body, but we're trying, man. We're trying. We're working and we're trying. Christian, how's your day off?
Wait a minute. Today's not Monday? I'm so confused.
No, I know. It's been like this forever, I feel like. Like we get this like middle of the day week, and I don't know what day of the week it is. It's like for the last month, I don't know what day of the week it is. We had the Wednesday, which was Christmas.
Yes.
We had the next Wednesday, which was New Year's. Now we get the Thursday off. In a week, and we're going to get the Monday off. It's like we're part-time traders.
And that continues. We do have a full week next week, but then the following week you have President's Day, so you got a Monday off. But that I went to my favorite city in the world, Ann Arbor. You took my nephews out to lunch, so we
Nice.
had
I
a
saw the
great
picture.
day. We got a lot to cover. I mean, I guess we got to start. We didn't really talk about it much, but these fires in LA they're having a real negative impact, especially on one company.
Yeah, I mean, obviously this is just terrible, and I don't know, like if they can get them in control here. The winds, I think, are supposed to die down, so hopefully they can start to get this in control. But this is just such a tragedy. And stock implications here. There's some obvious ones. All your insurance companies are down significantly here this morning. I mean, go to Chubb, go to AIG, go Allstate, go wherever you want. The one we're going to focus on is the one that still covers fire coverage, because most of the other companies don't have as much fire coverage as they did before. Obviously, that was from the California wildfires a number of years ago. Mercury General still has significant fire coverage, and this is why MCY is down so much and your major loser of the day. It's down 37%. I tweeted it out on Wednesday when the stock was trading down 5 points, because people were like looking at this, and I'm like, yeah, well, we just tweeted it out saying, this is the fire coverage. Obviously, I did not foresee this falling another 38% here today. Obviously, Raymond James did not foresee this either, because MCY comes out and reiterates their buy rating. They're talking about the stock had fallen to mid-50s in after-hours trading, and they liked it in the mid-50s. Well, it's now 37, so this is, why you don't catch a falling knife, folks. This is the one, area here where when you've got, the disaster that we're seeing, and this is your insurance company that covers fire, the disaster for these shareholders here is real too as well. So MCY ugly.
Whew. Well, I mean, it's hard to do technicals when you have, this kind of carnage in the markets, but I'll try and do it anyways. I mean,
That's what we do.
you run it in. I got two monthly lows at the $37 area. I'll just, if that was a target for short, we'll just keep an eye on it. Your next monthly low comes in at $32. But I think you have precedence here. You definitely have precedence, right? Because PCG has never recovered. I mean, it has recovered. I don't know how many years ago that was, but
Never really did. No,
yeah,
never did,
never.
Joel. I mean, this stock was $60, $70 when those fires, obviously California wildfires, I'm talking back to 2017 or 2018. And the stock's still $19, never recovered. I mean, the utility company here that's, maybe potentially, going to get some blame as well as Edison. EIX is getting hit here as well. We look Friday again, we get screwed up Wednesday, just awful day for EIX. It's down here again today. So no mercy here. So yeah, we do have some precedents here. I think trying to catch the falling knife, you may get bounces here. And people are like, well, this is a great insurance company. It's going to bounce back. Even like Raymond James saying they put the price target in the 80s, saying it's going to bounce right back at $80.
Mm-mm.
I'm not making that call. I will sit back and I will just watch what happens here as opposed to trying to make a call that this is going to be a snapback because the exposure here is significant.
One more precedence, and then Christian, I'd like to get your. I mean, technicals are tough, but I'd like to get your fundamental view on these. We also have more, unfortunately, more recent precedents, right? With the Hawaiian Electrical Industries, right?
Yeah.
Where's that stock going? What's
I
that
mean,
stock
they
doing?
don't bounce back from these things. So if we're just looking at history here, these things typically don't bounce back quickly from these disasters.
Or at
HE
all?
back in July or at all went from $35 to 8 or to 10. It's now 8. So it hasn't come back at all. I mean, it's tough recovering from these things. So if you think MCY is just going right back to 80 like MRJ, I will take the opposite side of that. Is it overdone at 37 this morning? Maybe. But again, trying to be a hero and saying, yeah, this is overdone. It's going to bounce right back to 60. I highly doubt you're going to see MCY back at 60 anytime soon. Christian, thoughts? You're
Christian,
quiet.
he can't
Christian's
even talk
quiet here
about
today.
these stocks. No, these stocks are so horrible. He can't even talk
Yeah,
about
I know. Like, because Christian's a momentum trader here and likes to find the bull story here. There's not much of a bull story here, Christian.
No, I mean, to your point, that's a really good perspective, looking at the PGR and the Edison and just saying, geez, if you were buying the dip in these things, it's really taken a long time. And yeah, I
Yeah,
mean, it just,
PCG, yeah.
I think it also just kind of shows like how difficult that this area is. I don't, it sounds like not to be like political or anything like that, but they just have a lot of problems and it doesn't sound like their problems are getting better anytime soon. Like this has been an ongoing situation. So yeah, I mean it's horrible. I hope nobody here has any major issues with this going on. But I would say on the positive side, maybe looking at Home Depot. I also see the
it.
home builders up this morning.
Yep.
Yeah.
So I see like it's not just one. I see Toll Brothers up. I
Yeah.
see Pulte. I mean, these stocks have really been beaten up because of interest rates. I think that while you're getting this relief bounce this morning, I think you're really going to need a bigger move in interest rates to get a sustained move out of the home builders, which kind of brings us up to in about 20 minutes we've got a jobs report that's coming out too. So as to your points, there's a lot of stuff going on this morning. Of course, this story dominating, but the jobs report 20 minutes, they're looking for a change in private payrolls of 140, which is to me is pretty low. The overall non-farm payrolls number that they're looking for is 165. So, we'll see. We've had 3 bond auctions this week. The third one, which was all the way back on Wednesday, was a little bit better. Finally showed a little bit of demand, and bonds kind of stabilized a bit because that's been all over the news too, about people really getting anxious about the yields going up. So I think that could really kind of set the set the tone for today and even next week, depending on what rates do today off of the jobs report.
Lots of things to consider here. So we're definitely going to have some major movement in 20 minutes once again. Home builders bouncing, everything just to finish off that trade. HD, Lowe's, all these stocks have really kind of been beat up, from interest rates, Christian. And now you get an event that's happening like this, and obviously these homes are going to be needing to be rebuilt. This is land that is, highly coveted land. So these houses, whether who's paying for the rebuilds is still to be determined, but they're going to need to be rebuilt. And I think the market is looking at that as an opportunity here this morning. That's why your home builders are up, and Home Depot and Lowe's trading significantly higher as well.
Yeah, Generac too. Dennis, made the comment, what homes are there to
generate.
But yeah.
That home, it moves with the home builders. GNRC has always been a home builder play. If you put GNRC on a chart with the home builders, they just move together.
Not to put the cart before the horse, right? Because what about cleanup companies? I mean, are there private? I know there's a big one private here in the Detroit area, Belfour. But what about the rest? I mean, there's gonna be billions or hundreds of millions spent cleaning that up. I don't know who benefits from that, but boy, oh boy, a lot of our thoughts go out. I got a lot of
Waste
relatives.
management is up here this morning.
Okay.
So if you're looking at cleanup like that, this is a major disaster. So I think, looking at WCN and waste management trade higher this morning. Well, WCN is not higher this morning, but WM is. It's not that surprising.
Okay. I got a lot of friends and relatives out there. Been checking in with them, and they all seem to be doing okay. So our thoughts and prayers.
That's the important thing.
Yeah.
Is stay safe. A house can be rebuilt, a life cannot. So, staying around, and fighting the fire, you can't fight these things. So just stay safe. Hopefully, we can keep, obviously casualties down to a minimum. Do we know of any casualties so far with this?
I think I've heard of
there has been some
5 to 10. Yep. And
stay safe. Stay safe.
Yeah, stay safe. I don't know if we have any people in that area, but please let us know. All right. So Dennis had a great idea to do acronyms for this year. Okay.
Yeah, me and Christians aren't working so well.
Mine's not working so good either, buddy.
Joel's yours isn't working that great. Well, the Costco is not helping. You should have stuck with punt, and you've been okay. You didn't want to. Yeah, and I'm going to call yours punt forever because you just did that because you didn't want me yelling at you the whole time. So, but you went with Punk, and maybe Punk wasn't the one to go with because obviously the C in Punk is Costco, and Costco numbers came out on Wednesday. Got it right. And they were smoking hot.
I know. Yeah, I'm not going to give you the numbers, but
I can give you the numbers. So Costco.
Yeah, okay, go ahead.
Oh crap! I had it in front of me.
Whatever.
I had the window open even, and I had the windows closed. But Costco numbers are coming to you quickly. They were up. December comps up 7.4%. That's a big number here. 7.4% comps were up. So, wow. That's. Huge number here. Usually comps on Costco is 2 or 3%. So everybody apparently shopping at Costco.
Yeah. Now, this was the one that's in one of my portfolios that I'm nervous about. And I was thinking about, perhaps, selling calls or putting a collar on. So I'm actually, when I looked at it technically on Friday, before that news came, Friday.
We're going to do it all day.
Yeah.
One day we'll have a full trading week again, and we won't be messed up. One day.
Joel, you mentioned
I don't know when that day is, but one day it's going to happen.
Joel, you mentioned too when you put the acronym together, and You made like very very logical sense, like thinking about that, because I've been watching this too, because I've been a shareholder of Costco for a long time. It's in one of my portfolios, and I started to kind of like, I've been worried about it too, because you mentioned there's been a couple of the comp sales reports over the last few months that have come in a little bit lighter than expectations, and I think that showed up a little bit in their earnings report too. So it's amazing to see them come. But like, I was shocked with these. I put these numbers on Twitter on again, I want to say Friday, on Wednesday, and I was shocked because X gas was also up
Hmm.
9.8% versus 5.2. So this kind of like changes the trend, and I think it's also like the holiday sales. Perhaps they kind of stole or took some market share from other people, because I don't know, were people going to, you think, December and of course Christmas holidays,
Hmm.
were people doing Christmas shopping there, or were they just kind of ramping up their, like, having people over, having company over, and hey, I'm going to Costco? But regardless, that does to me, like, it changes the trend. And if you look on I always look at your top right chart, because that's the daily chart. But
Yeah.
you do have a nice move off from a technical standpoint. You got a nice little move here. Now, it's still an expensive stock. Costco's always been an expensive stock. Whenever I tweet out Costco like a charter, I have
Very
five people.
expensive.
I have five people tell me how expensive the stock is, and I'm like, okay, the stock's been expensive for like 10 years.
Forever.
But
It's since birth.
yeah, but I like the pullback in Costco here. So I would rather be looking at it here and into that support, right where you got the word cost. And, if that holds here, I think it's a nice dip in Costco.
Yeah, but the problem is it's trading right up here right now at 9,542. So it had a nice double, a double top. It broke out above that. With these kind of moves, and I'm glad I didn't do anything on it. Let's see you get back half of this move. Get back to 955 might be an area. The thing about a stock like this and other stocks is, like, it's fine until it's not.
Hmm.
You know,
Yes.
like, it's fine, everything's fine, and then it's not, like, and I'm not gonna put this in the same kind of category as Target, but everything's fine at Target, boom, 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 and then it's not. And then once that happens, then you're like, oh, you don't want to have regret. But that tangent was to go to the other acronym that's not helping me out. Delta Airlines is not helping me out at all here. Trading at a new all-time high. Delta Airline, a $1.85 versus a
Big.
$1.76. They
Mhm.
beat on sales. They're like, every part of their company is just doing better, raising guidance. And you know what? Shout out to Frank Holmes. Those digital nomads are flying around on Delta and UAL.
The
So,
digital nomads.
yeah,
That's
there
what's
you go.
happening here.
Delta. I don't know, new all-time high. I mean, maybe
Yeah, this is an
yeah.
unbelievable move. I mean, the Delta and UAL moves are simply incredible here. It took a long time because the fundamentals we know turned way before the stock did. It's funny. They've had good numbers coming out of Delta and UAL for a while, but it took a long time for the market to actually believe it because we know airlines numbers are cyclical too. I mean, but it seems like people are going places and doing things. And, just as much as they shut everything down in COVID, once we got out of the pandemic, people haven't stopped doing things. It's like the save money for a rainy day mentality was thrown out the window because, hey, we don't know if tomorrow is going to come type deal, after that whole pandemic thing. So YOLO, all that stuff reborn. Well, you know what YOLO is a big part of is going places. Like, you only live once. That's the younger generation mentality, and they're going to spend, and enjoy life because they really got this YOLO mentality, and that really benefits the airlines too. So, that has just continued here. Obviously, we've had the laggards of the group, which is Love and AAL, but I mean, UAL and DAL kicking ass and taking names.
And Joel, look at the Jets chart. I know you already
Yeah.
mentioned the reference, but I mean, this has been a story that, again, it's like the airlines have been so difficult to trade over time. But
Really
they
hard.
just Buffett was in the group for a while, and then
Oh,
he couldn't stand it, and he got out of the group. But
the
Yeah, he did.
I
20s.
have to tell you, like, this is one of the most impressive trends, and you're going to see a new high today for this Jets ETF. also just to spin it in one other direction, because I have not felt really comfortable going after, even though I'm a trend trader and a momentum trader, I haven't really felt comfortable going after United and Delta, because I just know, like, historically
I
they've been
know
tough
you.
trades. Where I have
Mhm.
been kind of
That's my
setting up
problem.
camp is with the defense name, with the more of like the companies that make the jets, and like that's the XAR ETF. And there's a bunch of names that are continuing to do really well in that as well. FTAI, which was like a big name for me last year, I have not been trading it over the last couple weeks, but look at FTAI come right back up. This is one of those names that's involved in that. Another name, just to kind of go off on a quick tangent on it, I'll be quick. But look
That's
at
okay.
HWM is another one. Like, again, all I'm looking for is these names that have like just been resting just a little bit. I know they're up a lot, so I know that scares Joel. But
Scares
you know,
everyone.
if this one breaks 115, like, the trend is very strong. Another name that's going to be reporting, and I'm going to ask you guys about this one because it's going to report next week. Now, it's not the same thing. Defense and aerospace are different because the defense names have gotten walloped a bit on possible reduction in spending next year by the government. But look at Lockheed Martin. Right, this name
I
is going
did.
to
I pulled that up before you said it.
yeah, look, this name is going to report next week. I'm not sure what to do with this name because it's given back that whole earnings move from last quarter where the stock went ballistic from 470 up to 610 and has given it all back. What are your thoughts on this one and about a possible play for I might be looking at it as an earnings trade.
You know what the issue here, to a certain extent, with Lockheed Martin is? It's Musk being so close to the future administration, because this is all Lockheed Martin's all government contracts. I mean, the majority of their money they bring in is government contracts. And here's Musk running a SpaceX business. Not that they're different stuff, but again, some overlap here. I just don't think if Musk is coming in with that Doge, where he's going to be starting to cut, fiscal spending here. Lockheed Martin is in a lot of ways, a competitor to SpaceX. So I think this insane move down a little bit with interest rates for sure, a little bit of the value trade for sure. But there's a risk, a Musk factor here, and Lockheed Martin could potentially be on the wrong side. Again, I want the chat's thoughts on this too, but I think there's issues here with Lockheed Martin, with Musk.
It's logical. I mean, it's very logical here. Just want to go back to Costco here, just real quick. We got a teaching moment here from the Brentster and Dennis. I don't know if this is part of your strategies, but he says Costco comps are usually reported during the same time of the month, usually around the 8th or 9th. So I know you look for catalysts. So maybe Wednesdays and Thursdays, keep an eye on those Costco
I mean,
because
Costco numbers are usually pretty good.
yeah,
Um,
yeah,
It's
yep.
one of the few companies that still report comps. When me and Joel started trading, Joel started trading
Everyone.
back in the 40s, but when I started trading in the 90s, and everybody was reporting comps. You just wait, and it was comps this, every retail. They've all stopped doing it except Costco. Why does Costco keep doing it? Because their comps are always good. That's why they keep doing it.
Maybe I'll wait to worry about it until that happens. But all right, so DAL soaring high, UAL going with it, all the other airlines, all the leisure. So the YOLO effect is still there. So as long as we could fight off pandemics and stuff, these stocks are looking pretty good. We got another dog barking here, Dennis, and I don't know if you ever bought this things, but Walgreens Boots Alliance
The
here.
laggard trade.
The
I mean,
laggard
we've given
trade.
so many good ideas here on this show lately. Walgreens, we've given some bad ones too, so we're not going to pat ourselves on the back all the way. But this is stock that we've mentioned about the potential 2025 turnaround story, with the January effect. Do I think this turnaround story is going to drive this and continue to drive it? I don't think so. I still don't like the stock long term, but short term, you got to respect the January effect here. And Walgreens obviously coming out with fundamental numbers that were good enough. We'll come in here and say WBA beating by 12 cents, maintaining the guidance. That's all good enough for a stock that has been just absolutely destroyed.
And you know what also can really give this a boost is the memesters. You know, nice low price
We got
stock like
Brent giving us $10. He works for us, and now he's paying us too. This is fantastic. We need more employees like that. They work for us and pay us too. This is fantastic. Brentster, you're awesome. Yeah.
Uh,
One
okay.
day we're going to get revenue, and one day we're going to be actually able to pay our employees. That day is not today.
All right, come on. You're distracting me.
Okay, I just had to. That's not funny.
Blasting off to $1.60 here. I don't know. I mean, don't be a hater. $11. I mean, it's right around the corner. 11.30 is your next daily high. That was your December high. And I'd say longer term, and who knows what the price action, if you could get some kind of formation like this, at 11, and I don't know if it's just going to blast go 11, 12, 13, 14, 15. But if you build the base, because the big boys were nibbling at 8, they couldn't get too much. They were nibbling at 8.50. They couldn't get a lot. They were real patient at 9.25, 9.5, and now boom, it's gone. So where are the Bulls going to establish a bid at
Doubles.
WBA? Uh,
Doubles.
the Bulls. CVS. I mean, there's a laggard for you.
Again, that's in the laggard trade for sure. One of the laggards last year. It's getting a pop with the Walgreens earnings. I mean, I just don't know. I maybe would throw it to Christian, but these stocks here, like CVS, Walgreens. I mean, again, it's nice to see pops. It's nice to see the January effect working in certain spots, not working on every stock, but working in a lot of stocks. It's usually just a trade, though. It's not usually an investment thesis. Christian, your thoughts on these stocks?
Well, they're kind of you mentioned CVS. I was actually looking at some of the managed care names on Wednesday. They were kind of perking up. Now I know that that's not like the exact like same play, but because I don't really know what to do with Walgreens here. I would like to let's see how it kind of holds gains. I think the last time it went up on earnings, let's see. The last time just to look at the precedent, the last time it reported earnings, I think it gave it back like in the next like week. So maybe this is trying to kind of carve out a base at this time. But every time that this thing is popped, including that earnings time, there was another big move. I forget what the move was on December 10th or something, or December 11th. I don't know what that move was, but it gave it back there too. So all these pops have been getting faded. So I would like to see this one. So I don't need to jump into Walgreens here, but what I would like to see over the next coming days is for it to actually be able to hold the gains and not for those sellers. And that to me is always the problem when you're dealing with a name that's been in a downtrend and it's been there for a while, is you got some overhead supply that keeps kicking in. And that's the situation. Every time it pops like this, you get sellers just wallop the stock back down. So I'm in no rush with Walgreens, but I would be watching it to see if hey, I mean, it is a very low price stock. And if it can kind of hold in here, then it's a candidate, I think, to do something more than just that quick pop that you're getting on this. But I kind of like a couple of I actually traded and I'm still long some HCA. Now, again, this is a different group, but I'm also just watching the managed care
Starting to
names.
show some life.
Yeah, the managed care names have been so beaten up. There
Mm-hmm.
was an insider purchase on a name too that was about a month ago, which was CNC. That's Centene. So again,
Hmm.
this is tough stuff for me because a lot of these names are in downtrends, but I do take note when you got an insider who buys. That's CNC. Now I don't have anything on that one, but again, like I saw some call activity in an HCA, and I just figured, hey, this thing is down so much that it's worth taking a shot at, and it worked out for me well. I'm still holding a piece of that one.
All
And
right, Christian, sorry
yep,
to interrupt you.
yep.
1
I just
minute.
want to give a big shout
Going
out.
wide.
Yeah, I want to give a big shout out to Travis Mann, who just put in a $50 super sticker,
Oh
so
gosh.
that we have to pay Brent back 10, and we're up
Yeah.
50, so we're net 40. So thank you. Did Brent take his $10 back? Let's see. All right. So man, Quantum was a great play. Thank you.
Thanks,
Thank you.
Travis.
Yeah, thanks, Travis. Jobs preview. Dennis is going wide. We got some action. What do
Going
you got
wide,
for me?
man. This is going to move. It's going to move. I'm scared.
Don't you
Staying
know?
with you, but I'm scared.
Okay, 59.25. That's your pre-market high. That also coincides with your close on Wednesday. Yes, I got it right. Christian, 14 seconds here. Do you got the preview in front of you, or are we just gonna watch the price action?
165K is the estimate, and for non-farm private is estimate 140.
Hey, the people with the super extra fast wires
Oh,
are now
gosh.
getting
They
it.
don't
Here
like
we
it. They don't
go.
like it.
Yeah,
Oh,
it's hot.
They don't like it.
256 is the number for
how?
non-farm payroll, as well as private payroll is also hot. That's 223. There goes
They
the
don't like it.
dollar. There goes yields moving higher. So a bit higher. Again, very low
Oh, my gosh. The
expectations, which
TLT just fell off a cliff. Oh, my gosh. Another bucket's down. Holy.
Wow. Yep. There
Initial
you go.
reaction, they usually bounce them. Usually the bounce is a sell. So just careful here, man. Careful. Wow, I cannot believe this.
There was no, I mean, hot, super hot, like so hot that interest rates have to go up, Christian. I mean, where are we at on this? I'll just give you the quick recap. That was so quick.
So quick.
I didn't even have a chance to get
It's so
excited
quick,
there.
man.
I'll give you the positive. We haven't hit last week's low yet. I happened to put that on there. So if you're a weekly trader and you're looking at weekly support, well, we didn't take that out. That was at 59.74.75. I have nothing where we stopped at 58.88. So Jerome gave us a warning a couple weeks ago, and then we fell for Goolsby. I mean, this rate. I mean, does this take any rates off the rate cuts off the table? And in 2025, I mean, hot, hot, hot.
Well, I mean, too, the numbers the estimates were so low. 165 survey, like that's not a big number, and that's sometimes like I don't know how they put out these estimate numbers, but like who puts these numbers out so low? The change in non-farm payrolls, they were only looking for 140. So I to me it was a head scratcher. I'm like, geez, this is going to be a very low bar for this jobs number to jump over, and like even the number that comes out, like 256, it's not a very like humongous number. So again, I don't know who puts out these estimates and why they were so low. Another thing to look at here is average hourly earnings, which is another gauge of inflation. That comes in on the screws 0.3 versus 0.3. So it's a big reaction to bonds, and the dollar right now is dollar's up 0.7 of a percentage point. Bonds are down almost, or TLT is down almost 1%. Let's see if this comes back a little bit and holds in.
I mean, why can't we look at this as like, wow, we're still doing okay, even with all the relentless hike of interest rates and everything that, we're still humming along. So right now it's not really like a glass half full at all. It's like a glass that's completely empty here. And that's about as big as 1 minute flush bars that I've seen in this market maybe since COVID. I mean, in a 1 minute bar, if you think about the market cap there, we were at 59.46 and we dropped to 56.88. That's
They're
over.
hammering the IWM. They're hammering it. Hammered. Holy. Down at 1.5% here. Tom Lee's small cap rally still on hold. We've been consolidating here. Just talk the technicals on the IWM because obviously we had the big rally in November. We sold off with the value trade and everything in December. We've been, I guess, hanging here on this 220 level. We're starting to breach that support. I mean, if we start cutting through 217, Joel, I'm just looking at your numbers here. There's not much below. Wow. Holy, they're hammering it.
Hammering everything, man. They're just looking. This is. I
I
mean,
knew this year, like you had the right acronym to go short on it. I had the fade trade on it. I was like, this is not going to be the easiest year. Everybody knows, like the party goes on, we start and they start buying all the speculative stuff, and that speculation coming out fast right now.
2 years of 20% gains.
It's too much.
40% in 2
That's
years?
what our point
I
was.
mean, I mean, come on, what do you want? I mean, I've been, and, being very conservative with, hoping for 7 to 10 and definitely did not participate
I
in the
can't.
full
They're
20.
just hammering stocks right now.
Yeah.
Again, like they bounce these off. And so folks, like when you're trading this stuff, again, fade trade is buying dips, selling rips. It's not selling dips. So I mean, don't be surprised, if we do get some whipsaw action here today. I don't think it's going to be just straight down, but price discovery so far on this number is not good. This market wants lower rates. This number is not going to give the Fed any ammunition to even be thinking that way.
No. This is yeah, I mean, as long as these two things, looking at what TLT is doing and looking at what the dollar is doing, this is headwinds, and we're not in a position. If you go back to your SPY chart or S&P futures, this is in a position of that I think is very vulnerable here. So um I hate to kind of bring this up because people there's a lot of passion about this too, but also the breadth. Like I've just been looking at how many names are going down versus going up, and it's been, I was looking at this on Wednesday, and there was a huge amount of more names that are going down versus going up. When you look at one of the things that I measure on a daily basis is 4-week new highs in the S&P versus new lows. And once again, like the number, I can give you the number if you want the particulars, but it's one of those gauges that I just try to look to see, like, is the market healthy or is it kind of weak? And looking at that, they must have changed it, but I think it was something like 24 or 25% of the S&P was making a new 4-week low on Wednesday, which again is not a position of strength. It's a position of weakness. So
Bouncing
um,
here right now too, just to interrupt you, I am selling some of my longs here into this bounce. So yeah, Christian, I don't know, man.
And I mean, I don't want to be like the bearer of bad news here, but and also this alluding to the airlines here. I mean, look at crude. I mean, we're worried about, inflation, and look at, one of the biggest factors here. Look at that. I mean, I know it's been quiet on the monthly and everything, but if we're worried about interest rates, worried about inflation, right there, man, that's been a big move in crude here, just over the USO here. So a lot of negative fact. Also, natty gas has been perking up too. I don't know how much is a bigger component as that is. That has a lot to do with the cold here, but boy, oh boy, not a good way here to start the trading session. We did bounce twice under 5,900. Like I said, we are still not at last week's low. Traders full pricing of Fed cut. Next Fed cut not till October. How does that factor into the investors psyche here? But we got red across the board. Delta's still up, UAL's still
Sorry.
up. They're holding on to their gains, but the big boys, Apple, Nvidia, the Apple,
And we didn't
Nvidia,
even
Mike,
tell the
all of them.
NVIDIA AMD news. So NVIDIA AMD story coming out Wednesday. Biden's going to try to block more of these chips over into China and everywhere. That had NVIDIA trading down, had AMD trading down on Wednesday. AMD gets a downgrade from Goldman Sachs to hold here today. I mean, this is the one thing. It's so difficult to call turnaround stories. The main reason it's difficult is because the analysts just don't let up. All the analysts are momentum analysts. They jump in, they chase, they're lemmings. And when you have, a stock beat up, they just downgrade. And when stock's rallying straight up, they upgrade. And that puts more pressure on it. Like AMD just had 10 points knocked off it because of two analysts, HSBC and Goldman Sachs. I mean, maybe 7 points, maybe I'm exaggerating, but it was like 127, and then HSBC downgraded to 122. Then GS downgrades. It was going to go down today anyways because of the news. But analysts, whether you respect their calls or not, they move price.
All right, let's just take a look at that AMD. Let's get rid of the 1 minute. 1 minute makes me nervous here. Boom, boom, boom. We'll go to the 15 minute. Now we talked about AMD, and analysts got to go negative going on Wednesday here, and here you are. You're back at the low of the move. Low of the move, 117.90. That was buffeted by a low at 118.45. So if you've been looking for the low of the move here, you're getting a shot at it. Also, monthlies here. There's, I mean, going back to late 23. I mean, I would have, would it be short and whooping up down on the hole like this? We got another monthly low at 116.37. That reversal day in Nvidia was absolutely wicked. They just came out. You fall for those shows in the CES and all the hoopla. Now it's back under here. Maybe just a trading range for Nvidia. I do see it's down 367, but just be aware the low for the year is 134.63, but there were three other lows in the 134 area. So not there quite yet.
I'm going to say something today, right now. I'd be buying this dip on NVIDIA. I own NVIDIA in the long term. I'm thinking about adding it to the long term. That was actually, an awesome presentation. Sorry. That was an awesome presentation. And you had the classic sell on news event. Now you get this down in the chips. Now you're getting it selling off on interest rates. What have I always said? NVIDIA does not care about interest rates. NVIDIA, if you get a shot at 130, I'm going to back up and buy some of this in my long-term portfolio. But even as a trade today, I don't like catch falling knives. I think NVIDIA at 136.5 here is a buy. Just my opinion. I don't have a crystal ball. Don't hold a gun to me, but I think NVIDIA is a buy today. It's the kind of stock that I would be buying on dips. You got to think about what is not care about interest rates. It's NVIDIA. They don't care about interest rates. And you're seeing everybody's nervous and fluff coming out. Oh, 136, it's going to go to $100 tomorrow. I don't think so. I don't think the AI story is going away. I don't think AI cares much about interest rates. I think NVIDIA is the place to be.
Okay. All right. Well, there you go. Putting your money where your mouth is. And let's go to the TSM numbers here, Dennis. I don't know if you have them because it's not all doom and gloom here for the chip sector. TSM out with a pretty good report. They did give some of it back.
Yeah, I'm buying some NVIDIA right now.
Okay.
Just even in the trading account, catching the falling knife. Maybe I'm going to
and
regret it in 5 minutes, but
I always look at too when there's a little bit of pressure too. I always look at Apple too. What do you think? What do you guys think of Apple? After we've seen a couple analyst notes like hammer the stock a little bit. It's holding into. I have a support level. Blah, 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 waiting for my charts to update. I have a support level which is about 2% away. So I'm kind of looking at this. I traded some Apple on again Friday, but it was Wednesday. I didn't hold on to it just because I didn't want to hold it into the jobs report. But I like Apple. I know you look at relationships a lot, Dennis, and like looking at things that do well and a little bit more of like a move like this, because really, again, at the end of the day, like this is. The good news is bad news, right? We got a better jobs report, but right now we're so fixated on what bonds and the dollar and whether or not they're going to cut rates again. But it's not necessarily like bad in terms of like Apple's business, and so do dips get bought in Apple and Nvidia?
Yeah, I think so. Again, Apple isn't going in my long-term portfolio just because I think the valuation is just too much and the growth isn't there. But I think for today, I think tech actually is going to win the day here. You've got the Qs down more than SPY right now. I think that trade reverses. It wouldn't surprise me if the Qs start to show life. Wouldn't surprise me if the Mag 7 starts to show life here again. Tesla's interesting. Tesla would like lower rates, so it's not as good for Tesla because Tesla's a car company still at this moment in time, even though it's an AI company. It's also a car company. They sell cars, and as interest rates go higher, not good for them. So I would stay like probably NVIDIA, looking at Apple. I think those kind of stocks actually the stocks.
You know what? Let's see what Jeremy Schwartz thinks of all this. CIO of WisdomTree, cracking down on the numbers. We're going to bring Jeremy in right now. All right, Jeremy Schwartz, WisdomTree CIO, crunching those numbers after a big surprise here. We're kind of a jaw dropper here, Jeremy. How you doing on this? I'll get it right on this Friday morning.
Happy New Year, guys. Good to see you all. Interesting conversation on right before I was joining on NVIDIA and Apple and all that. Yeah, I mean, we've been saying at the end of last year, we were saying the 10-year could creep higher, and I had been saying in December we would be saying 5 to 5.5. So we're definitely we've moved aggressively. I think 5.5 is high, but when we think about where the normal term structure of rates is. When you don't have a recession, the premium between the 10-year and Fed fund should be 100, 150 basis points, like 120 on average. So that would get you to a 5.5 where the Fed funds is today. And so we're at 480. We've been uninverting the curve. We're now 50 basis points uninverted. That's a much more normal environment. But stocks, as you guys were saying, rates are pressuring the markets a little bit. We've been saying at the end of last year, that you could have some challenges involved from the rates moving higher. So, this is sort of exactly what we thought the environment could be. And, you're getting everybody been saying the Fed's going to cut. We've been aggressively saying, hey, inflation's coming down. We'll get the next inflation report next week. We have our own measures of inflation saying real inflation is much lower than the reported statistics. So there's a case for cutting. But the Fed narrative is that, hey, they're going to stay paused and that the 10-year should creep higher. So it's a lot of interesting dynamics and all that.
And this is one thing that I've been discussing and arguing. The stability in rates. I mean, not necessarily ratcheting higher, right? That spooks the market. We know the impact of that, and we know we're not going down to the ridiculous rates that we had. The Fed was definitely starting to move towards, being a little bit more hawkish, and then they had no choice but with COVID. But I mean, if you look at the past history of the markets, stability could be a good thing here. Not going way up, not going way down on interest rates.
I mean, what's interesting about what Dennis was saying on tech liking rates being higher. You'd also say small caps in value like an economy that's not a recession. I mean, small caps have this dynamic of, and value stocks really, when your PEs are like 12 to 13 on a lot of small cap value stocks, this year's earnings matter a lot. So if you had a recession, that really hurts this year's earnings. Tech, if you're 30 times earnings or 40 times earnings, this year's earnings don't matter at all. It's really about your long-term earnings. So the cyclical stocks are very reliant on a recession call. So stronger economy, this is very good for the earnings of those cheap stocks. But they confront you like they're the only ones paying the higher rates from the Fed. So they've got this things that are good for them of being strong economy, but anything that keeps the Fed higher for longer hurts those small cap stocks. So it's a really interesting dynamic. I think there's apt to be rotation at some point, but I kind of agree with Dennis in some ways on NVIDIA of, this AI story is definitely not going away. It's not really as expensive of a stock for 36 times forward earnings. I mean, it's been delivering in many ways. And I do think that AI story is with us for a long time, as everybody's saying. The question is, when do they have an earnings disappointment? It's everybody's racing to spend more and more money. So it's hard to see it in the short run. So it's just an interesting dynamic of everything reacting to rates, though.
So what about the value trade? Rotation. We all know these value stocks been on a lot of pressure here. You have your favorite value fund, the WisdomTree U.S. Value Fund, which it seemed to have a nice run, a little bit of a rough December, but it seems to be riding the boat here at the $82, $83 area. Talk to us about value.
Yeah, WTV is our value fund. It has a focus on dividends and buybacks. So last year, when growth, crushed value, this was a real strong performer. It had things like Vistra, like the top performing stock in the S&P. We bought it when it was a close to 10% shareholder yield. We wrote it up, sold it in December. It had AppLovin, one of the highest performing stocks last year. It was a high buyback stock, sold it in December. But the combined dividend buyback yield on this fund is close to 7%. These companies are doing 5% net buybacks, a little bit under 2% dividend yield. It's only a 13 PE. So when I think about the S&P at 23 times earnings, this is 10 points lower it's certainly not expensive at all. These companies are buying back their stocks. They think they're cheap. And, so I think it has some margin of protection, margin of safety built into the valuations. And that strong economy number is very good for these types of value stocks. So I think for people trying to say beyond the Mag 7, beyond things like NVIDIA that you guys are talking about, what could be set to work this year, it's something like this fund, more diversified, more equally weighted, but focused on buybacks.
Hey, Jeremy, great to see you on the show, and always great to see you. You're one of my favorite follows on Twitter as well. I was just looking at the holdings of WTV, and like you think, value, like maybe like a Procter and Gamble is going to be in the top, or like a UNH, but you got Jabil up here, which had good earnings, and I guess this is an equally weighted ETF, correct?
It's interesting. It's an active ETF, so it's not
Okay.
it's not exactly equal weighted, but compared to like the Russell value, the S&P value, some other things that we do, it's not like a cap weighting. So it's not like where you get the biggest companies, biggest weights. We focus on dividends and buybacks, more buybacks than dividends. As I said, 7% yields, but 5% coming from buybacks. It's focused on that yield number. And then we sort of do the activeness comes in the rebalancing process, letting some of the momentum run so that it doesn't force back to equal weighting. A lot of the one of the top funds last year, you saw equal weighted taking monster flows, like an RSP, some of these other equal weighted funds took in a lot. Those are anti-momentum funds. They're always selling the winners. Every quarter, they're selling the winners. Yeah. And if you rebalance back to like a yield or an equal weight, you're always selling the winners. And what we're trying to do in these rebalances is let those winners run a bit and come back to those yields. As long as it still qualifies for our screens, we'll let it stay in there.
Yeah, I was just looking at the way that this is weighted, like the top weight is only like 1.4%. So I like how it's very evenly distributed. You got things like PayPal's up there, EQH, SYFs, Asynchrony. So I like this. This is more of to me, more of an exciting way to play, value, because people think, it is what it is. Because I've been trying to say like, hey, this value trade maybe is due for a catch up versus growth, because growth has just been like, just off the charts, like going crazy over the last month. And, from time to time, we are seeing some profit taking there. And when you think value, it's like, this is boring and so forth. But this is a little bit of a sexier way to kind of get into value stocks, because even like NRG is a name that I'm watching. You mentioned VST earlier, but that's another name that's been doing pretty well with not only the move in like nat gas, which has been moving higher, but also with like this power theme with the CEG and the VST. So I like the way that this is situated, and I'll be watching this one. That's a good heads up on this.
Appreciate it, Christian. I don't think we've been on the line together. I mean, I follow you as well on Twitter. I love all the commentary you put out on ETF. So good to be on with you.
What about the buck? What about the almighty dollar here? Back at the highs of the move. I guess it's an importer versus an exporter. It has different impact on different companies. Give us the outlook for the dollar on the U.S. market, U.S. companies.
Well, this is one that I tend to have an outlier view versus the way most people do international. This is also, it's very much tied into the rate story. So it's not a surprise at all. The 10-year pops, 10 basis points higher in the morning. You see the dollar strong. You see the euro down to 102.5. I mean, it was up to 112, 113. You got the yen after the August sort of flash crash in Japan. You got in the 140s. We're back to 158.5 on the yen. So the dollar is moving very much with the economy and rates. The dynamic with oil is also very interesting. You think back to the 2 decades ago, and we would be importing a lot of oil. That was a pressure on the dollar. Now we're not, and so these other countries, Europe, Japan, have to import a lot of oil and have all sorts of dynamics. So I think that people get confused on where commodities are, what it means for the dollar, but I think people don't have enough strong dollar exposure in their portfolios. It's people, the dollar acts as a hedge. Today, market's down, the dollar's up. And when people go overseas, when they buy Europe, they buy Japan, they take the euro, they take the yen. I think that's completely backwards. They should be buying the dollar for some parts of their fixed income portfolio. Our friend Jim Bianco, who manages a fixed income fund for us, WTBN, he has a position in the dollar in his fixed income fund. as his tactical play. He's sort of been in the market for a year. He's actually been beating the broad fixed income markets pretty nicely, but this is one of his out of conviction bets, and it's done well for him. But I think for what it means for people, if you're going to international, don't buy the euro, don't buy the yen. Think about hedging. Think about the dollar as other places to go, because there's still, if you get to 5.5, like we were saying, there's upside risk to the 10-year. A normal environment would have the 10-year at 5.5 today. Not saying it's getting there, but that's the upside range to that. The dollar could go a lot higher, and that would be a risk to the markets. And the dollar is one of those things that would benefit.
Looking at other places, China, India, Japan. I know you've talked about these economies, these countries, and of course bringing in the dollar here. Talk to us about. I mean, China. I mean, everyone was loving it. Now everyone's hating it. We're better staying off in the U.S. or looking to China, Japan, or India.
I mean, a lot of people have been trying to catch this China bottom, and there's been some false starts. It spiked up, as you saw. You saw Tepper say buy everything China, and it really exploded in that October rally. We're getting the new policy proposals, we're hearing all the rumblings of what is Trump going to do. Obviously, tariffs are a key part, but I think China, there's a lot of rhetoric, a lot of negotiation, a lot of outlier comments. But I think the China friction is real, and he views China differently. I'm as much as it is a true value, quote unquote, story. I see China as more of a value trap than a real long-term theme. You got to be able to trade it very nimbly. If you're going to get a spike, it's not one of my high conviction themes, even though I understand the people who say these stocks are cheap. So for me, if you're going to go outside the U.S., the two places are Japan and India. Japan is the best value play internationally. It's got the corporate governance. It's got the stuff like Buffett buying Japan because they are actually doing dividends and buybacks. So it's our basket with DXJ is 12 times earnings. These guys have been raising their dividends. You get paid 4% because we're hedging. So coming back to that dollar story, EWJ has done nothing in the last number of years. Like if you comp DXJ versus EWJ, it's a real challenge because the yen has been so weak, but you're getting paid 4%. And EPIs, I think I just bought some more of this in my 401k every year. This is going to be one of the best long-term growth stories around. Gunlock's talked about this as well as his long-term themes, for your children, grandchildren's retirement accounts, put, the India ETFs in there. And it's not going to be a tax efficient country. It's not the same ETF story. So I do think your retirement account is where you want to hold India over the long run. But it's it's got the young population. It's going to have 10% GDP growth. And on dips, I think India is the type of place you want to buy on dips.
So really quick, this is an important point with when you're looking at some of these international ETFs. You're actually, unless the ETF says so, you're actually essentially short the US dollar because you're holding a basket of international names. So look at so Jeremy brings up a great point, the difference between and Joel, if you want to bring up a chart really quick of EWJ, sure, because that is actually holding the Japanese securities, and you're essentially you have currency exposure. You're also short the dollar. Look at the difference between EWJ and DXJ, which also very similar, holds a basket of Japanese securities, but they actually hedge out the currency exposure. So you're getting the pure performance of Japan without the currency effects, and that ETF is very much outperforming the one that doesn't hedge the currency exposure. So it's important if you are looking at international, you want to know whether or not you've got dollar exposure or not, because most of the international ETFs do not hedge out the dollar exposure. So great point, Jeremy.
All right, we've been on the line with Jeremy Schwartz, CIO of WisdomTree, always giving us a calm, cool, and collected fundamental outlook on the markets. Jeremy, we'll be dialing you up again in the month of February. Thanks for joining us.
Love it. Thanks, guys.
Okay, Triple D, I see your head on a swivel there. A lot of action. tried to go down near the lows here a couple times. You are seemingly to find some buyers under here,
Got
5,900.
support down here. I mean, we just went straight down from basically, 600 on SPY down to 584 in 3 days. What was my trade? I forget. Oh, it's called the fade trade. Well, that works in both directions, folks. It's not only selling the rips, it's also buying the dips. 580, huge support on SPY. I don't think you
It
get
is.
there today. Maybe you do. If you do, I think it bounces. I think that's the bounce. But I don't know if it can get down there. Maybe you're a little bit early at 584. We're still leaking, but like I said, I think there's going to be certain pockets of strength here. I was like looking at Micron today, looking at Nvidia. Look at those tech stocks that everybody was chasing after the Nvidia conference, on when it was. I'm losing all track of my days, but Monday or Tuesday or whatever,
Tuesday,
when
yeah.
Nvidia was up, everybody's like, oh, I got to buy these stocks. Well, now you're getting the dip to get into those stocks. So if you think the AI theme is real, which I do, this is the opportunity maybe to get into some of those names, like the Micron, for instance. Obviously, I wish I would have bought at 85. I wish I would have bought at 90. Well, I wasn't buying at 107, but now you just got cut in half. Do you get a shot here today at 95, 96? I think if you do, you take that shot.
Okay. Before we go to Christian for your final thoughts here, Dennis, you wanted to talk a little bit of strategy here, a little bit of your weekend strategy that you've mentioned in the
Oh, I was
past.
going to say, okay. Yeah. So an interesting setup here too, because it's going to be really weak going in. JPM Healthcare Conference on Monday. JPM, that's the big one. Lots of talk will be, obviously healthcare, but biotech stocks will be in focus here as well. I know you put IBB up there, but I don't trade the IBB because it's all the big names. Those are the acquirers. XBI is the companies that have the potential to get acquired. Do we hear from some deals next week with this JPM Healthcare Conference on? I think the potential is there. So I've always do my XBI weekend trade, but I'm probably going to double load it on the close. Not buying it right now. Gonna have some crazy movement here right now. Off of the, obviously, because this is interest rate sensitive. But let's see where it goes out. I think you have the potential that we could see a little bounce, into the weekend here as people get excited for that JPM Healthcare Conference. So I intend to buy the XBI on the close.
Okay, I just I see Zoltan in the chat here. I mean, if that's our buddy Zoltan from Benzinga, he wants us to take a look at Mobileye. I'm going to do that real quick, and then Christian will get your final thoughts.
Oh my
This thing
gosh,
got
horrible story.
absolutely I didn't check what is the news. This thing was, oh, you know what? It was the CES pump and then the dump. I
Yeah.
mean, what did they did they like go do something on stage at CES and it didn't work? I mean, what the heck happened to them? But I will just say, you're trading down another $1.10 here. This is an important area. Under $16. I'd be keeping an eye. Ooh, 1581. Better hold in here, or you got another buck drop to 1480. Dennis, any comments on Mobileye? And then we'll go
I
to
mean, I
Christian.
haven't been a
Final
fan
thought.
because I think, again, Mobileye has had this focus on LiDAR, which I believe in, what Musk says. He knows more than I do. And, Musk was using LiDAR in their cars until 2020 and they scrapped it all. So because they're going more on vision. Now I actually saw some headlines where Mobileye is focusing more on vision, not so much on LiDAR too. So this isn't recent, but I mean, obviously they're scrambling around here a little bit. LiDAR may be, important for the robo taxis that are on Waymo, but if Musk can solve it visually, maybe a lot of the stuff the Mobileye, is working on isn't as important. Now, that being said, stocks beat up. I do think that Mobileye is looking and figuring it out as well. It's interesting. I would say it's interesting on this dip. I don't know if I want to be the hero and say catch the falling knife. Maybe I wait till we start to see some strength and then try to buy some strength because this is a violent reversal for MBLY.
Okay, Christian, wrap up the show for us.
Yeah, I like that idea, Dennis, with the conference next week. Remember, buy the rumor, sell the news, and that's definitely something I might be looking at going long some XBI calls for next week, just as a catalyst to see if something gets announced. I also think that it could be a better year for biotech with possibility of a government that comes in that's a little bit less so for regulations. So I like that as well. What's very interesting is how much these small caps move on this economic data. So you're looking at small caps now down about 1.9%. I would not be looking at this group. I think it's the most vulnerable. If you're worried about interest rates and a stronger dollar, then you can basically possibly think about, if this breaks, this is going to be your first thing to break because of those reasons. And that is now taking out the lows of where we've
Yeah.
seen over the last month. So not
Yeah.
looking pretty in small caps. But I do like tech. I think tech could possibly outperform a little bit. And the reason why I said Apple too is because they've got a huge amount of cash, right? So that's why it becomes more of a comfort trade in these environments. I would also be looking at what energy stocks are doing too. They're your best perform. Believe it or not, energy is your best performing sector year to date. And I still like things like EQT, AR, because not only is crude up, but nat gas is up too. It's cold outside, guys, and I think it's going to stay cold for a while. So I'm liking what's going on in energy as well. But yeah, I'll leave it there for now.
There's
Guys, have
some pockets of strength here.
yeah.
Christian, is pointing them out for you. And maybe, that's, this value trade, value rally might be for real here. Interesting. I just want to point out Costco has given back most of its gains here now. Joel, you're looking a little bit better. It's only up $5.
I know.
It's difficult to chase anything up 20 points in this environment. Lesson learned here is that you're not in Kansas anymore. We're not in this rah bull market where the stock that goes up 20 goes up 40. Often the stock that goes up 20 goes back to scratch. So the numbers were awesome at Costco, everything good. Valuation's an issue here, and we're just not in Kansas anymore. So I think you got to be really careful. The fade trade, I'm going to keep this all year, you're going to hear this from me. But if it's continuing to work, the way I'm making money right now is not chasing moves. The fade trade does the opposite. It actually goes in and sells into strength. It'll sell those high flyers. It would sell a stock like Delta today. And again, Delta's numbers were fantastic. And maybe if it goes up, what goes up 10% goes up 20%, or it goes up 7% goes up 14%, but I doubt it. We're not in that environment anymore. So if I'm playing the fade trade, I'd actually be a seller of Delta into this strength. Sorry.
All right. Great show, guys. We're gonna wrap it up. Jeremy Newsom. We gotta find out where in the world is Jeremy Newsom,
That should be
former
a game.
owner of RLT, world's greatest wealth coach. Maybe we need to have him. Maybe we need to merge with him as well. He'll be our guest on
I love
Monday.
Jeremy. Jeremy's awesome.
Special, if you haven't signed up yet for our wrap up of the show, you have to right now. Brentster, I don't know if you have the link or not, but I will put this in the YouTube chat, and you guys can sign up. Just a great wrap up of the show, a preview, a little bit of Monday. We covered a lot today, folks. Thanks for joining us here on Pre-Market Prep. Have a great weekend.